Phil McAndrews, we got a better than expected November jobs report this morning. We're almost certain to get a rate hike in December. So how will this affect the way you invest in real estate over at TIAA-CREF?
You know, look, we have good job numbers, and that's good for real estate. The business we're in is renting space, and when job levels go, become strong, that's a strong indicator for real estate in terms of renting out space. Challenge, as you said, though, it does affect Treasury rates. The spread between Treasury rates and cap rates, which is a prime determinant of value for real estate, is about 300 basis points right now. Normative is 270 basis points. So we already have a little bit of give and a little room to absorb a rate hike in real estate.
Can you talk about the demographics right now? For a long time, we kept hearing about millennials would rather rent than buy and housing formation. So just talk about how the demographics are playing into real estate right now.
You know, the rent-buy for millennials is a factor for them right now. They also have other costs that are imposing on them, their student loans and, rising costs in terms of, their goods and services. So it's a bit of a challenge for them. But what's really interesting about millennials right now is they're trying to combine things, live, work, play. When we're in real estate, we're designing properties that really are attractive to them on multiple levels. In other words, they want to be in an environment where they're close and their transportation modes are easier. They want to bike to work. They want to walk to work. So a more urban infrastructure is more attractive to millennials, and the real estate industry is addressing that. And that's why you see so much gentrification, urbanization of areas.
What about foreign buyers? Because we're going to see that rate hike and things are actually weakening in terms of currencies in Europe, the dollar's getting stronger. How will this affect foreign buyers? We've seen foreign buyers really boost prices here in New York as well as Miami's. What's going to happen going forward with that?
You know, we still really feel confident about the U.S. position right now. U.S. Inc. is in a really strong position relative to other investment choices. That's why you see strong capital flows from Asia into the U.S., from Europe into the U.S. In other words, we have political stability here. We have good employment data, as you're seeing right now. All of these factors is what's making us an attractive alternative for foreign investment. I don't see that declining at all through 2016.
All right, what about the three most important factors when it comes to real estate? Location, location, location. Which are hot?
Yeah, people still want to be near the coastal markets, and those are the Boston, New York, Washington, D.C. Texas, believe it or not, has a coastal market. It's Houston. You've got San Francisco, San Diego, Los Angeles, even Seattle and Portland are attractive. The reason for this is that these are more infill, tighter locations. They have good job growth prospects, good supply constraint. So real estate investors want to go own where there are less challenges for someone to build and compete with you. These coastal cities have, as I said, good population demographics, employment demographics, and supply conditions. And
TIAA-CREF has a global real estate account. This is a variable annuity. Why is this a better way to invest as opposed to publicly traded REIT?
Yeah, what's really interesting is we run $86 billion of real estate globally, and we run it for our own participants at TIAA-CREF as well as third-party investors. This real estate account that you're referring to is a publicly registered vehicle with the SEC. It's not traded, but it's publicly registered. And its interesting dynamic is it gives investors direct exposure to direct investment in real estate. REITs, on the alternative, are publicly traded vehicles that are highly correlated with the stock market. So to get a truly derived real estate return with a little less correlation to their equity portfolios, the real estate account is a terrific alternative. It's a $22 billion fund, and it has a very durable rate of return.
And how liquid is it? Because that's another big question when it comes to real estate.
Yeah, so it really has a daily liquidity feature. People can get their money out once a quarter, but they can do it on any given day.
All right, well, thanks a lot, Phil, for coming and talking about it. Thank you for watching The Street.